Hey, welcome to the New Home Insights podcast by John Burns Real Estate Consulting. I'm Dean Worley, your host. Each episode, we're going to bring you some of the best minds in the housing business talking about some fascinating topics or trend or innovation or issue, just like the one you're about to listen to. Enjoy. Welcome to the New Home Insights podcast, the John Burns Real Estate Consulting podcast. I'm your host, Dean Worley. Tony Avila is here with us today. How you doing, Tony?
Just living the dream.
He is the founder and managing principal of Encore Capital Management. Encore is one of the premier capital sources in the country. They've secured over $1 billion of investment capital since 2009. That's probably outdated. I'll bet you it's more than that. Tony also has Builder Advisor Group. They raise capital and they also help new home builders and others through merger and acquisitions and IPOs. Tony, tell me if I'm wrong, I think you've been an integral part of about 7-ish mergers and acquisitions, and how many IPOs?
We've done, right now we stand at almost 90 M&A transactions that we've done since 96. This year, seven M&A transactions in 2021, which is a record for a 5-month period. And then IPOs, I've been involved in 6 builder IPOs since the 1990s.
Okay. Yeah, I'm sorry. I should have said that. I meant this year.
Okay. No.
So that's the part of your world that we're going to focus on, the mergers and acquisitions, the IPOs. Start us off, though, by just telling us a little about yourself and about Builder Advisors and about Encore as well.
Yeah, sure. Well, we've been, what we did is we set up, in my family, we always invested in real estate in the greater San Francisco Bay Area. So I always had a passion for real estate. I went into real estate investment banking, focused in home building. There was a tremendous amount of opportunities there. I also focused in golf. Ironically, golf was very popular in the 90s. So I had the distinct pleasure to represent the buyers of Pebble Beach and the entire Pebble Beach company, which was a historic transaction. Rarely do you get to work with the likes of Peter Ueberroth and Dick Ferris, but also working with Clint Eastwood and Arnold Palmer and an all-star cast of buyers that today own Pebble Beach. A lot of wonderful people and a wonderfully structured transaction that took many aspects of the capital stack, and a lot of that experience I've leveraged today, especially working on a transaction where it was an M&A transaction, a debt transaction, an equity transaction, and a preferred equity transaction all in one. So that was great, but really a passion focusing in home building. Also a passion of still wanting to invest back in the land. So what makes us very unique and quite frankly, the most successful is having our Encore fund, Art Falcone and I, within our Encore funds. And today it's actually about $2 billion of equity capital. And we've been able to deploy that successfully across really 6-7 different vehicles that we've invested both in multifamily and also in single family, a lot of lot development where we're selling land and lots to home builders. And then, of course, we have our Builder Advisor Group. That's been my bread and butter that I've been working since I've been in the professional world, focusing on mergers and acquisitions, but also capital raising for builders.
Okay. So let's jump in. Let's start with the builder selling part of the equation. So why are builders selling their companies these days?
Yeah, well, first of all, valuations are the most attractive I've seen since 2005. The valuations are good. Builders are, in some instances, they just went through the pandemic and were nervous. But some of the guys who were selling also went through the financial crisis back in 7, 8, 9, and certainly don't want to live through that again. A lot of guys who own their companies today, they have 90% or more of their net worth all in one vehicle. That would be their home building vehicle. And they say, hey, let's get some chips off the table. And in some instances, they're going to sell half their business or more. But there's a lot of drivers today for somebody to exit. Sometimes they just want to retire within the next 2 to 3 years. So it could be personal diversification net worth, could be exiting. Look, I'm ready to retire. I don't have a good legacy of who to hand this off to. There's a lot of reasons right now. Also, just valuations are kind of driving that decision as well.
I've heard that, by the way, that sometimes you're kind of looking for that longtime builder where the founder is ready to go and maybe his kids aren't that smart. So he's a logical target.
or maybe their kids are too smart.
I hadn't thought about that. Who are these sellers then? Is it? I mean, you don't have to name names, but do they tend to be the smaller privates or the regional, or kind of characterize them?
Yeah, sure. I mean, it's been all of the above. We've had some larger players, some larger names, and we've had some smaller guys. I mean, we've done transactions that are in the Busher family had Mercedes Homes, which was one of the
Mm.
largest private builders in America, and they decided they had their reincarnation was called Vintage Estates, and very successful in both Florida and Texas, and decided to sell and sold to Lancy, which Lancy is a twofer because you had Lancy, you had some Chinese capital, but then you also had that they did a SPAC transaction, so you had a SPAC also doing the deal as well. Effectively, or now it's a D-SPAC, of course, but acquired Vintage Estates quite successfully. So who are the sellers today? We've had a regional Bill Michael Dilworth, sold to one of the subsidiaries of Clayton. So that was a relatively small Alabama transaction. We've had quite large the Shea Homes in North Carolina. They sold out to Empire. So you had these are cousins of the more notable Shays in California, but very, very successful Charlotte-based group, and two of the team members are delivering for Empire today, but a very successful transaction. So it's varied. It's been varied geographically, and it's varied by size too.
Do you ever have a situation where they sell apart, where they say, you know what, we can't support a given region, let's say, any longer, so we want to sell just that region? Is that how often does that happen,
Oh,
or
very
does it?
definitely. Yeah,
Yeah.
we've sold off. We did that for Hovnanian and Raleigh. We did that for Bill Clark Homes. We've sold just a part of the region of the business in several instances, and so certainly we've been involved on that on both the buy side and the sell side.
Okay. Let's flip it to the other side of the equation here. Who are the buyers? Is it always kind of, the big guys?
Now it's such a diverse group of buyers today. It's the largest group of buyers we've ever seen. I mean, our potential buyer or investor list to invest into home builders is really in the hundreds. But I'd say active. We're north of 40 active folks that are just very active today in buying a builder or investing into a builder. We have a wonderful group of high net worth individuals that got together called American Southern Homes. That we've worked on at least two transactions with them so far, and as a buyer group. You have obviously all your publics, and nearly every one of them are considering, would consider or have executed on a transaction. But there's close to whatever 20 public buyers that are out there. Private builders have gotten certainly very active in this. There's wonderful companies like a Roush Coleman or a David Weekley Homes that are in there doing deals. But then you've got, of course, we mentioned Berkshire Hathaway's subsidiary Clayton. They're wonderful buyers, but we've got international. We're talking about Canadian, Asian. We actually had another country has been heard from. We just got contacted by another a new player to the scene that's contacted us to represent them very confidentially, and so we'll most likely be starting to work with them in July. A little bit European capital, a lot of Canadian capital.
Yeah. Yeah. What is motivating the buyers? Is it all about market share, pipeline growing in that sense, or is there a lot more nuance?
Yeah, I think one of the things we'll talk about is the American economy is kind of the cleanest dirty shirt in the international economy, in the laundry of we tend to be doing, and then the prospects today look extremely strong. So you see a huge amount of investment dollars here in the U.S. or money coming into the U.S. because they see such tremendous growth prospects. They also see, obviously, the millennial generation being our largest generation, just starting to enter that either home buying or home living in, depending if you're a single family rental guy. There's definitely an undersupply of housing, and so they see that as a tremendous prospect for investment. Those are both domestic and international foreign investors that are coming into the U.S. I think those are those are the biggest drivers right now that we're seeing. Obviously, in a post-pandemic world, many people are realizing how important the home is. I need that extra space. I want that yard. I don't want to be in an apartment. I don't want to be in an urban environment. And not everyone, but many people, and that's also exacerbating the demographic shift to housing, single family detached.
Yeah. Is that a safety thing, Tony? Is that like is almost a double a twofer in the sense that the U.S. economy, with our laws that we mostly respect, is a very safe place to invest, and real estate is seen as a safe sector. Is that fair?
Yeah, we have good rule of law in this country, and that's certainly something we're seeing as a challenge in other sectors, in other countries where you've had investment capital, but there's been some issues and challenges. So we clearly have great rule of law. Real estate is seen as a hard asset, and potentially in an inflationary environment, that's something that definitely people want to go and hold as opposed to holding cash. And you see, TINA is kind of one of these investment acronyms you hear. There is no alternative right now. So there's not a great alternative in equities, not a great alternative in bonds. Commodities obviously are getting rocked right now. I mean, obviously we can see where lumber and copper, but even like a cryptocurrency where it's like, okay, I'm going to go and invest in this thing that earns me nothing, but it's just a speculative investment. And in fact, many people don't even know what it is, but I'm going to invest in it because I see it's going well. Well, that's obviously been halved. So people know what single family homes are, and they can see and feel and touch them, and they can see the rent check coming in, or they can see their home price appreciation, their HPA, if they own their own house and they're living in it. So I think from an investor perspective, it's definitely become an institutional asset class where in 2008 it was not.
And we can put a picture of a cute dog on homes and maybe a Shiba Inu, just throwing that out there. And we have an extra enhancement. How about, is there anything else they hope to gain? I mean, market share, safety. Are they also, sometimes the buyers are hoping to gain efficiency, maybe internal efficiency? Is that ever true? Or, I don't know, entering the hottest market or something like that?
There's a lot of motivations. A lot of motivations for investing in the sector right now. Certainly, a lot of the public builders will have challenges growing. It's hard to keep growing at 20% without doing M&A. And if you looked at D.R. Horton from 1995 to 2002, when we closed the Horton Schuler merger, I think Don, with Rick Beckwood, actually way back in the day, and Don Tomnitz, a wonderful group of cast of characters at Horton, they did 17 acquisitions from 95 to 2002 and made, they've become America's builder. So certainly for growth is a big part of it. Certainly for growing top line revenue, growing closings, but also accretiveness, looking at the bottom line. Certainly investing capital. If you ask a Japanese investor why they would be coming why would Sekisui or Sumitomo Forestry or Mizawa or Daiwa, all the different players that are coming in the U.S., they're generating tremendous cash. They've had tremendous success investing with home builders here in the United States, and there's better growth prospects demographically. If you look at the demographics of Japan versus the United States of America, they really like the demographics here in the U.S. And then just from a return on capital perspective, a little bit better return prospects here. So certainly that's it as another big driver.
Tony, how forward thinking are let's take a big builder, right? Are they placing bets? Are they like, oh, we're betting on market A and market B is going to be the big driver. Or do they sometimes want to diversify, like price and product? Like, oh, we should have some stuff that's more bread and butter, or we need some stuff at the high end. Are those kinds of considerations happening too?
Yeah, you see diversification in product, diversification in geography, diversification on strategy. We see much of that occurring. We also see, hey, we've been successful in this segment, so this is a segment we want perhaps in that geography, or we've been really successful in that geography. We want to buy another company that's also in that same geography, same product line. We'll buy a competitor out because we're running out of inventory, we're running out of land, we're running out of lots. So we do see diversification. We see an incremental investment within an existing segment of the product segment as well.
How about let's talk about start to talk about the process. So, as we know here at JBrick, we've very often been the folks on the market analytical side of this process. There's a lot going on behind the scenes before the world at large hears about a merger and acquisition or even an IPO. How long does a typical M&A take from start to finish when you just start this conversation to when you make the big announcement?
Yeah. My record's 42 days on the fastest that we've ever done it from first discussion to closing. And, uh, when we went through the pandemic, we took longer than a year for some transactions where we just put it on a pause and hang on. Generally, we're talking about a process that's 3 months on the shortest and, 5 months on the longest. That's kind of our goalpost for going and get a transaction done. If you want to talk about from all the way from when we start creating an information memorandum and sign confidentiality agreements and then
Yeah.
get letters of intent in the door, pick a, really once you pick a buyer, then give that buyer 90 to 120 days to close. And sometimes to get that buyer and agree with that buyer. Right now we might be selling a company and you've got 5, 6, 8, 12 different offers for the company. And so you got to pick through that, and that can take some time to pick a winner, pick a horse. And then
Yeah.
once you pick the horse, then usually again, 3 to 5 months on the outside.
What makes this kind of deal go really smoothly? Have you noticed any factors that, okay, when those are in play, these things tend to go better?
Strong communication between buyer and seller, where you have the buyer and seller interacting well. You don't go through attorneys. You have to have the principals in charge of the attorneys and not vice versa. I see things go awry where it's the guy talks to his attorney talks to the other attorney talks to his guy, and it's a game of telephone. The game of telephone that we
Yeah.
played when we were 6 years old in kindergarten is exactly the same today.
Uh,
So bad communication is anathema to the successful M&A process. That always it's always every time really trying to get that buyer and seller to communicate well.
is there anything else I was going to ask you, but you kind of answered it both in one. Is there any factor that makes things go not so smoothly? And it sounds like the antithesis of good communication.
Yeah, faith, trust. You have to have a buyer and seller that trust us, trust the process. Our clients that hire us, they have incredible faith that we're going to be doing the right thing. Creating a win-win, we work on that where it's successful for both buyer and seller. That's a hallmark. If you look at our track record and our deal pipeline and what we do, and you talk to the buyers and sellers, I think that's a hallmark that you'll hear. Okay, there was a tremendous amount of faith and trust on both sides, and a successful process was run.
Is it sometimes not just the lawyers, but the IT folks too? We hear a lot about technology sometimes being a problem when two companies try to get together. How deep in the weeds do you go on those operational issues to help solve those kinds of problems? Do you ever do that, get to that level?
So we're typically quite involved in within every aspect of the acquisition. I'd say that most of the integration efforts on the IT side, where it gets bogged down or there gets to be a lot of headache, is typically post acquisition. Anytime you do a systems integration, it's a massive headache.
Yeah,
And it's not just a set of systems integration, it's also an accounting integration.
yeah.
When you've got an acquirer in there, they're going to have reporting standards that are needed, and you're going to have a seller that's just not used to doing that. So that is something that there is some post acquisition work that needs to be done, and it is painful. We've all been through IT systems integrations, but that is usually what you're asking about. 90% of the pain and suffering is really post acquisition, as you're trying to get the systems put together. Usually pre-acquisition, we're prepping for, okay, what are we going to do? What's our migration plan? And a lot of times that's being worked on, and that is one of the box checks that we have as to pre-acquisition that we work on.
What has have you do you, I mean, you have to be careful here, I know, but what was your toughest deal that you've ever worked on? If you have to use a clever code word, feel free.
I would say, the toughest transaction. It's always hard to get into names, but the toughest transaction has been where you've got ego, where you
Mm.
have a tremendous amount of ego on the part of the both either the buyer or the seller. That's where it gets real real challenging, is to some extent checking the ego at the door.
Isn't
Yeah.
that always a problem? No, honestly,
No, no,
in this, no,
no,
okay,
absolutely not. No, you have so many amazing home builders
yeah,
that
okay,
you think they've got this big ego and that's their way. But
yeah.
when they go, the reason why they've been so successful is because they surround themselves with strong team members. They have faith in their people and the process, and they can be relatively humble and unassuming when you're going and working on a transaction. And so, but I'd say that, yeah, the worst deals are where you have this massive ego, and um, yeah, you don't have a sense of compromise, and you don't have a sense and then also that lack of communication as well, is really challenging. So without getting into specific deals,
Yeah.
I can tell you that's been the biggest. The other thing is just a lack of knowledge and a lack of understanding, and fear. So these are all things that can make M&A challenging, and
I was,
impatience. You got to have patience
uh,
and persistence in this. For M&A, it's patience and persistence.
I was just teasing home builders though. I'm actually talking with Mike Forsum at Landsea here in a couple hours. So I was tweaking them. Uh, is there a hit ratio? In other words, you go through a lot of these deals and they don't happen. Do you have a rough idea of out of how many M&As you look at, how many actually come to fruition? Does that make sense?
Yeah, generally it depends on where we're at in the process. But when somebody hires us, okay, we want to sell our company. We're going to have depending if they're realistic on their price expectations, it's going to be a 80% plus
Mm.
confidence interval that we're going to close a transaction. Um, and so we have a real high success ratio as far as if you have a realistic seller, and then in that case, there's high probability it's going to close.
Does the builder that's selling usually go through a lot of potential partners when it gets to you? Or is it, the first or
We
second or so?
Yeah, usually we've known somebody for quite some period of time, and
Mm.
they're saying, hey, we think now's the time. Sometimes people we've had there've been some other there's some other advisors that work in the sector, and we've had people contact us after working with another advisor, just and I've walked through, okay, these are those who forget history are doomed to relive it, right? So okay,
Yeah.
let's make sure we go through and understand what happened, and we can talk about the sort of how we could do things better, the mistakes that were potentially made. So sometimes we do go and kind of clean up messes that have been
Uh,
occurring. There's a lot of PTSD and things that we have to overcome there. Um,
how about how about potential builder partners? In other words, X number of folks who look at that deal. You know what I mean? Does that make sense? So they want to sell, and it's the seventh person that actually does the deal.
yeah, I mean we've definitely had transactions where we had to kind of put a buyer to the curb, or
Hmm.
we were working with a buyer and we trying to buy this one company, it just didn't work, so we had to move to the next one. But a lot of times we'll work with a company that's selling, and with the buyer that was the highest bidder, they're just not performing, or it's not going to get done. We have to go to a backup. That doesn't happen all too often, but it certainly happened. I don't know that I've got to the seventh yet, but maybe in one instance I've gotten to the third, and sometimes it might have been the third time was a charm.
It's not bad, actually. That's a pretty good hit ratio, I would say. Let's talk. We teased it a minute ago. Let's talk about Dream Finders Homes. That's a major builder. They're based in Florida, I believe. They're active in Texas and a lot of the Southeast. You helped them go public not all that long ago. Can you kind of walk us through that IPO process?
Yeah. Dreamfinders is we have an exec. We don't have a conference. We host an executive forum. John Burns comes and presents typically, but we do an executive forum every year. It's invitation only, and it's an exclusive list of the top kind of the faster growing, the more forward thinking builders across the country, and some land developers. We'll bring them in. But we won't have research analysts. We won't have institutional investors. We won't have the press. It's a very so Dreamfinders has been coming to our executive forum for several years, probably 4 or 5 years, and we've followed Patrick and what he's done, and when Rick joined the firm, what they've been able to accomplish, and we've been working with them. So the process was we've been talking with them and coaching, kind of giving them our thoughts, they'd seen our success we've done with LGI Homes, with Century Communities on their IPOs, and so they wanted to kind of get that secret sauce, because if you looked at post-financial crisis, if you looked at the top performers, the two top performers were LGI and Century Communities, and those were the only two IPOs that Builder Advisor Group worked on. And we've worked on a lot of M&A transactions for Century, and we've worked on a lot of M&A and capital raising for LGI, every deal since. So what we did is formally we got hired in June of 2020, in the middle of the pandemic. The pandemic was really going strong. We said, you know what, the housing is looking like a clear winner. Timing is right. And so what they do is they have the faith in us to help them select like an investment banking group to kind of be that syndicate to kind of place the stock. And then at the same time, we also selected a syndicate to do an unsecured syndicated credit facility. Dreamfinders, with all their acquisitions, had 22 or 23 individual credit facilities with 22 or 23 different lenders. That is untenable. You can't manage that. So what we were doing at the same time as we were dangling out there, hey, we've got this potential for an IPO. Who wants to come in and do a syndicated unsecured credit facility? And we set it up like the process to let's select a lead. And ultimately, in this instance, the lead was B of A, Bank of America Securities came in this instance. But there's a lot of wonderful lenders that are out there. We talked to all of them on who wants to be the lead and put together, let's say, $500 million, $450 million syndicated unsecured credit facility. Taking a builder to unsecured, the holy grail is once you're an unsecured borrower, that just opens up, frees so much time. So it's such a wonderful thing. You don't have to have mortgages. You're just an unsecured borrower. So the big thing was figuring out how to go and do that. Once we did that, and then we set up the right syndicate, and we understood, then from an IPO perspective, to execute the blocking and tackling. I mean, I've worked with investors in the sector on the IPO side, and we've obviously, if you look at our track record at LGI Homes, the guy who bought in the IPO was up 13, 14 times if they still hold the stock. So we know the right investors, and also there were some amazing investors that were already in Dreamfinders that wanted more. If you look at what Boston Omaha did, they were fantastic, and there were a tremendous amount of friends and family that I've never seen the amount of friends and family interest. So you had we had an offering. Ultimately, we crafted an offering that was maybe 11 million shares. Including the green shoe, and you had an over allotment option, and we had 100 million shares of demand. So when you have that much demand and only that many shares, and half the shares are being taken by existing investors or friends and family of the firm, we had a tremendous a lot of demand, very little supply. We know where the price is going to go, so we went out at $13, and the stock opened at 20, and first day closed in the low 20s, and has been up to whatever $34, and it vacillates quite a bit because the float's going to be kind of small right now. But what we've been able to do, or what we do in these processes, is we set up a process for success, and make sure that you've got the right underwriting team, you got the right credit, you got to have the right capital stack, and then you got to bring in the right investor group too.
So in this case, you kind of cleaned up their financial situation before you took them public, and that was a pretty critical part of it.
Mission critical was getting their capital stack set right, and that's the both sides of the balance sheet, getting the debt side set up perfectly. And really, it's all on one side. Actually, technically, it's all on the right side. It's both liabilities and equity, and getting that in the right balance and with the right capital stack.
Did that demand that you're seeing tempt you to push up that initial public offering amount? I mean, what kind of play goes into that $13 in this case?
Yeah, so we wanted to get public as soon as possible because the window was wide open. That IPO window can slam shut. So we wanted to get out and get public as fast as possible. We did have a discussion about upsizing the transaction, but I think the company is very careful with dilution and not wanting to dilute their earnings per share. So we were very careful on the number of shares that were issued.
Okay. Switching gears a little bit, I know, Tony, that you are an avid runner. In fact, you told me you do Ironman triathlons, whereas I can barely manage a dance 2021 session with my wife, and I almost always lose. This is one song I'm better than her at. But they say that there's a runner's high. Is there a deal high? And you come to the end of a long process and you nail it. Do you feel something like that? Some of these deals?
Yeah. When the wire transfer hits and the deal closes and we have a fun closing dinner, we'll take the victory lap and have we'll have the runner's high. Runner's high is different, and in a triathlon you get a high when you're cycling, and certainly in the middle of the swim you'll have an amazing high there. But so it's very different doing as far as the high that you get. Oftentimes the highs that you get might be right in the middle of a run. Certainly when you finish, when I finished the Ironman World Championship in Kona in 2018, that was, one of the greatest accomplishments in my life, and having my dad at the finish line put the lei around me, and having my son when I qualified to go to Kona and Boulder, having my son put the finisher's medal around my neck. And in my first Ironman, where my wife put my finisher's medal, you definitely have an incredible high. That was right before I went to the emergency room. But it's in Ironman and in marathons, patience and persistence, and in mergers and acquisitions, patience and persistence. There's a huge parallel there. But it's definitely, and I'll be out on a long run or a long ride, and I'll definitely solve a lot of our clients' problems while I'm out there. I'll be thinking about how we're going to get over this one challenge or what the right strategy might be. I'll definitely do that while I'm out running or riding or swimming.
They would for sure have to fish my body out of the ocean. I make no bones about that.
Put a wetsuit on. You can't
to make it, put an orange one to make it easier to see my body. So let's talk about your crystal ball here with the last couple of questions. Will we see a lot more of this activity, M&As or IPOs? Do you think, are we heading toward a period with a lot of that?
Yeah, we have. This is the most M&A transactions I've seen in my 25-year career. We'll probably, knock on wood, we got 7 closed so far. We have about 6 in backlog, and another 3 companies that are about to launch the potential for sale process. So it's a unprecedented time. I think we'll see a tremendous amount of M&A in 21 and 22. Beyond that, I don't have a good crystal ball. Anyone who does, I would either back them quickly or be suspect. But I think we'll have a good amount of M&A this year and next year.
Yeah. Do you look at trends? Are there any trends that are metrics that would signal that M&As or IPOs are going to, diminish? Are the hot market conditions at present a big part of the attraction right now?
Yeah, I would say that where you don't have a good land supply, you don't have a good there's shortage in land, shortage in lots, shortage in people, you'll see a need for M&A. What we started to see in 2006 was a backing away of land transactions. Definitely started to see a slowing of demand, and that pushed people away from. You had a big mismatch between what the guys who wanted to sell their companies, what they want to sell them for, and what the buyers were willing to pay. And so when you have that mismatch or that disparity, then your M&A deals start going by the wayside. So when is that going to be? I'm not sure yet. But
Yeah. It's interesting you said people there, because a lot of times in M&As, particularly, folks are worried they're going to lose a job, they're going to get squeezed out, especially if you're with, the junior partner. But now, are they actually looking to enhance their team through M&As? Is that something?
yeah, it's definitely something we look at when we're going and doing a deal. Is let's look at the where there's who needs people, and oftentimes the sellers really feel like the people in the organization are like family. So let's make sure they get treated well. And in almost any M&A transaction, there will be some impact with people, but the vast majority of people are needed in a transaction. You need construction people, you need salespeople, you need everybody that's working on lines. There's, in some instances, there may be people at the home office, which may be the most visible to the ownership, where it's like, I don't know how that person's going to necessarily fit and how that's going to work. And a lot of times it's like, all right, well, we need to get some type of payment set up for that person so that they that we're taken care of, or being or doing something for them. In this kind of environment, though, that person is sorely needed somewhere.
Yeah. Yeah. I've noticed that a few times here with folks, clients of mine, where, it seems like everybody lands on their feet somewhere in their recent deals, because they are so sorely needed. Let's end with policy. Do you see any policy changes from, whether it's, I guess, the federal government most likely, that might change this landscape? Do you track that? Do you see anything coming down the pipeline that you're worried about, or maybe might actually enhance conditions?
Well, certainly capital gains, and what the capital gains rate will be for anyone that's a C corp tax rates, what those will be. So tax will have will have an impact on the process for sure.
Okay. Any crystal ball there?
Yeah,
You do? What do you?
yeah. I mean, I think you have I think we might still have a middle ground on. I don't know that we'd end up at a 43% capital gains rate, but if we did, I mean, I would think there might be some kind of middle ground, so there'll still be a variance between the two. But if there's not, then I think there's a big push to close some deals, and then there may be a pause there as people kind of assess, well, now I'm going to be taxed the same, so I'm not sure what I want to do. But I think a lot of guys will still say, well, I still want to take my chips off the table. In some instances, we'll look at the 1031. Seems like a 1031 exchange will still work, so we will work to 1031 land positions and have some tax efficient. And then we'll also look at we'll look at other efficient ways to structure a transaction. There might be some deferrals of compensation that eases the tax burden. But yeah, that's going to be that'll be something we're certainly watching.
Awesome. Tony, thank you. I know I learned a lot. I hope you, the listener, learned a lot. Thanks so much for coming aboard.
Happy to do it. Thanks a lot.
Awesome. This has been the New Home Insights podcast with Dean Worley. Till next time, see you then.